Hello, everyone. Happy Sunday to you. Welcome to another edition of my weekly technical analysis. In this video, we shall be running through the USDJPy chart structure to identify potential trading opportunity for the incoming week. And trust me, by the end of this video, you will be able to make your independent decision using the information you have gathered here. And it's on this note I welcome you all once again, and let's dive right into the business for today. So the first thing we are going to be doing here is to look at the chart from an holistic point of view by diving into the daily time frame, which you can see on your screen right now. And we have been monitoring this pair for quite a while now, and if you look at the structure critically, you will see that I'm still holding on to the highlight I did on this chart, which confirmed the 131.00 area as a very strong demand zone in the last 1 year. As you can see, every attempt by sellers to break through the structure has been met with strong resistance from the buyers. So what I'm going to be doing for the sake of the time, I will be diving right into what has been happening in this market since the beginning of this year. And if you look at things closely, you will see that since January, price action had consistently found higher lows in this market, which emphasized the level of buying power in this market. And as a result of these, I was able to connect a series of higher lows here to give me this bullish trend line, which has been supporting that momentum in the last 5 months. With the situation we have here, it is quite glaring that buyers are trying as much as possible to push price to the upside. However, since the month of March, there is something interesting we observed about the structure, and that is the 137.500 area, an area which is the highest point price action had ever been for this year. And as you can see, despite the bullish momentum we have been witnessing, you will see that as soon as price gets into the 137.500 area, we have always seen how sellers jumped in to negate all bullish attempts around that area. The same thing also happened at the beginning of the month. After citing this whole situation here, we saw our price action drop further to the downside back into our former neckline of that reversal pattern. Remember, if you had been with me for the last couple of weeks now, you will remember that we identified this neckline in my previous video, which was supposed to be serving as a platform that will validate the reversal pattern and at the same time confirm the potency of that pattern if a breakout of that level happened. And since then, we saw the breakout retest of that structure, confirming that buyers are trying to push price to the upside. But if we take a closer look at what has been happening since the beginning of this month, after price action tested the 137.500 zone here, you will see that we have an impulsive move that brought price back into the neckline, which also shares a beautiful confluence with that bullish trend line. And one interesting thing about this whole structure is the fact that price action appeared to be transitioning into a reversal pattern in the form of a double bottom structure, which from a technical standpoint is a very strong reversal pattern. So with the two touches here, and the first one here, this was around the 133.500, and you can see what happened last week. Price action was unable to break the previous low, giving us a higher low, lining up with the bullish trend line to emphasize the level of buying pressure around this area. So what we are going to be doing now is to scale down to a much more lower time frame so that we can identify the neckline upon which we are going to be using to guide our trading activity going forward. But before I scale down into a lower time frame, I would like us to also keep tabs with the fundamental aspect of the market by checking the economic calendar to see if we do have any macroeconomic event that everyone in the market will be looking forward to. And you know how important this for us, as it helps us to time ourselves appropriately and at the same time help us to position ourselves ahead and during and after this event to take advantage of whatever move is likely going to be happening. So with that being said here, I want us to quickly run through the economic calendar, and I was able to spool out a handful of high impact events, and you know how we do it here. We want to focus on high impact event that will be affecting the instrument we are talking about, and that is the USD, that's the US dollar, and the Japanese yen. So the first high impact event isn't coming until Tuesday, May 16th, and that is the retail sales for the month of April. The retail sales data is released by the US Consensus Bureau, which measures the total receipts of retail stores. So what this simply, it's the change in retail sales are widely followed as it is seen as an indicator of consumer spending, and generally speaking, a high reading is seen as a positive data for the US dollar, and a low reading is always seen as a negative sign for the US dollar. Now, if we look at the previous data here, we had a minus 0.6%, and we have a general consensus projecting 0.7% for this month, for the month of April rather. So we are going to be looking forward to see what the actual data is going to be like. Is it going to be beyond expectation, below expectation, or just right as the same projected here? Then the other event is coming up later in that same day, and this is coming from the Japan's economic docket, and that is the GDP for quarter one. And you know what the GDP is. It shows the monetary value of all the goods, services, and structures produced within the Japanese economy. And this is a very, very high impact event, obviously, as it gives us an health insight into the economic situation of Japan. And from the data we have here, we have a previous data of 0%. So we are looking forward to a consensus projection of 0.1%, and let's see what is really going to be happening on that day, what the actual data is going to be. But obviously, one thing we know for sure is that the anticipation of these two events here is going to be reflected on the chart as price action. And in that regard, we are going back into the chart to look at the technical side of this market. So like I said earlier, we are diving right into the lower time frame, that is the 4 hours time frame, where I was able to identify a simple setup, which will be a follow-up to what we identified on the daily time frame. Now on the 4 hours time frame here, what I did here was to consider trading activities since the month of March, and it's quite obvious that price action is bullish. So if we connect the series of higher lows here, you will see that we have a bullish trend line that has been supporting that momentum since the month of March. However, the most important structure is what has been going on here since the beginning of this month. So I have a couple of lines here which I'm going to be explaining in details and how important they are in guiding our trading activity for this week. So the first thing we identified on the daily time frame was this potential reversal pattern in the form of a double bottom structure. So we saw the first touch here. Price came back into, let me extend this out a little bit so that we can see things more clearly. So into the 135.300. Then we saw the second touch here, had the 133.770. As you can see, price was unable to break the previous low, and during the course of last week's trading session, despite the choppy situations we had, we saw this whole impulsive move to the upside. Now remember, whenever we have a potential reversal pattern like this, the next thing we want to be doing is to identify a neckline which shall be serving as a platform for a confirmation and validation of that reversal pattern. So we have a structure here at the 135.300, which suits perfectly well with that neckline of that structure we just identified here. And if you go to the past here, you will see how important this line has also been a major determinant of price action in the past. So for this reversal pattern to be validated here, we need price action to break out of that neckline for that confirmation to happen, which we already saw during the later part of last week's trading session. And as soon as price got into the 135.750, we begin to see some choppy situation going on around that area. Now with this whole situation here, what is going to be our expectation for the week? Well, there are two things that I'm going to be buttressing here. First of all, I want to acknowledge this reversal pattern here, the double bottom structure you see here. And then the neckline of that structure is around the 134.750, which was broken also on Friday before the neckline of that reversal pattern that we identified on the daily time frame was also broken around the 135.300. So now with the situation we have here, we could see price action climb up. Hold on a second, I don't know what's wrong with my hold on a second. Okay, sorry about that. So we might likely see, after this impulsive move right here, we might see price action at one point in time come back to retest the neckline of either of the structures to anticipate the trend continuation to the upside. It could be the 135.300, it could be the 134.750, but most importantly, what we want to be looking out for is a reversal pattern that will support the potential of a bullish momentum. So that is what I was able to spot out here on the 4 hours time frame. So we are looking forward to probably price come back to retest the structure at one point in time, or even come to this level before another wave of bullish momentum happen. And if it so happens that price action drops to the downside, that is, breaks down that bullish trend line, then we might likely be seeing a sell-off in this market. So what I'm going to be doing now is to scale down into the 1 hour time frame so that we can see if we are going to be part of this price action retesting the structure, that is price action moving down into the structure before the move happens. So scaling down into the 1 hour time frame, this is what I was able to spot. So on the 1 hour time frame, right around that 135.750, let me bring it out here so we can see. You would notice that during the later part of the previous week, we saw this old choppy situation around that area, which is more or less characterized with some level of selling pressure, as you can see the nature of this candle around this area. So we might likely see that a retracement phase at this point is overdue. So if the sell pressure continues below the 135.750, then we would have no choice than to be part of a bearish move where we look out for how price action reacts to either the 135.300 or the 134.750 for an opportunity to join the trend continuation to the upside. So that is one scenario we are going to be looking out for this week. Then the other possibility here is that price action could just slice through the 135.750 to incite the beginning of another wave of bullish momentum for the week. So at this point, you would agree with me that the 135.750 will be serving as our key level for this week, as it depends on how participants in this market react to the structure during the early hours of the week that will determine what our next line of action will be. So I will be pausing the video here, and be rest assured that I will be with you right in the comment section of my TradingView platform to give you updates on what I think is going to be happening in this market after monitoring how participants in this market will be reacting to the structure. I do hope this video has been of immense help in making your personal decision on the USDJPy for the week. And if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at @DarkSherry. The name is spelled right at the top right hand side of your screen here, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching, and I look forward to seeing you right in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.